Step number 4, find and filter. What does find and filter mean? Well, find and filter means we're going to start to look for properties. We're going to figure out the best way to find good investment deals in the commercial arena. And then when we talk about filter, what we want to do is have a down and dirty way of evaluating the properties to determine if they're worthy of spending more time. Okay, so when we say find and filter, we find the properties and sometimes we're going to filter them out. Folks, you may look at 30 or 40 or 50 properties that are listed for sale in one way or another before you find a good deal. Now, what you need to be able to do is filter out most of those properties so that you don't spend a whole lot of time messing with them if they're not a good deal in the first place. And so that's one of the things that we're going to talk about in this step. If you had to spend 20 or 30 hours in due diligence on 50 properties before you found a good deal, you'd probably go broke in this business before you made any money. We don't want that to happen to you. So we're going to show you a great way to do this. First of all, what are we looking for? And there's a couple of things that we're always looking for or targeting when we're looking for commercial deals. The first thing is distressed properties. Now, what would constitute a distressed property? Any number of things. Some properties are just mismanaged. By the way, can properties be mismanaged in a good market just as easily as they can in a bad market? Of course. So when we talked a little while ago about cycles in real estate, and sometimes cycles are good, meaning that the properties are hot and the market is hot, doesn't mean that there's not good deals out there because there are still mismanaged properties. In the training program itself, we spend a tremendous amount of time on how to find these types of properties. Underperforming properties or undervalued properties. Sometimes properties are just improperly listed and they're undervalued in the marketplace. Sometimes there's properties out there that have a very high vacancy rate because they've been poorly managed from a leasing point of view. One of the issues that we find routinely in the commercial arena that represents the opportunity for a good deal is somebody who's trying to manage the property themselves. There's professional leasing offices out there. There's professional management companies out there who in most cases can do a far better job than somebody who owns a 10 or 15 or 20-story building who's trying to manage it themselves. Other reasons are over-levered properties that have too much financing on them and therefore they can't carry themselves, particularly if interest rates adjust. There's a number of reasons for this, but the easiest way to find good deals is in a thing called the hidden market. In any given marketplace at any given time, the norm is that 3 or 4 or 5% of the properties available in the commercial arena are going to be actively listed.